Okay, so today I'm going to be showing you guys exactly what breaker blocks are. A lot of people find this PD array a little bit confusing, so I'm going to try to simplify it as much as I can for you. So in the simplest terms, breaker block is just a failed order block. But let's go more into depth on that. So let's look at this bullish breaker block indicated by this plus sign over here. So we see this low create a high, that creates a lower low, and that creates a higher high. This zone, this high, I'll show you exactly where to mark it out later. This high is a breaker block, meaning that when it comes back into this block, is gonna propel off. And the reason why this happens is because retail traders are going in longs from this low to high, and they get trapped. It comes back down, and usually this lower low is within a high time frame liquidity sweep. It sweeps it, comes back up, this becomes a breaker block, and it just gives you another way to enter. That's the strength of breaker blocks. It's just an entry model, or you can use it if you're late on an entry, or that's at least what I use it for. So I see this liquidity sweep. Let's say I missed this big run up, I could wait for a retracement to this breaker block, and then I could go longs here. Basically, these retail traders, they try to go long a little too early, and it's literally the opposite for inverse breaker blocks, indicated by this negative. So it's a high creates a low, creates a higher high, creates a lower low. Usually this higher high is within a liquidity sweep. They try to go short a little too early. Over here, they try to go short a little too early, move back up, swept again, created this big push down, retraced, moved down. How am I doing on time? Exactly, straight to the point, 2 minutes, explain what a breaker block is. And so here, let me show you guys some live examples from some trades I took. Or these are not some trades I took, but I didn't take it off these breaker blocks, I mean. But I'll show you exactly what I did. So basically, let's look at this. Let's look at this trade. Create a high, create a lower low, a higher high. What is this? Let's go back to our diagrams. Where is the diagrams? Low, high, lower low, higher high. That's a bullish breaker block. Boom, you place down, you draw the breaker block right here. So what I do is I do it on the last candle before the move. So see this candle, because this is the most sensitive area right here. What other people do is they draw the series of candles before the breaker block. I think that's excessive. Personally, this is what I do. I just do the body of the last candle, because that's where you see the most reaction off, right? And this is something I saw off of ICT. What he does is he gets these numbers, copy it down. It's on my Fibonacci sequence: 0, 20, 0.2, 0.25, 0.5, 0.75, and 1. And I guess this could give you more precise and optimal entries, right? Because as ICT said, if we go for the first half, so right here, this quarter and the 0.5, this is like a trigger block or a trigger point or whatever. Basically, he uses this for FVGs, but I noticed that it works as well as the same amount for breaker blocks. So see, most of the times it comes into this first half and blasts off, right? Boom, see, again, blasts off. You could have taken a bunch of entries off this. I actually use this for my take profit. So we look here, there's a liquidity sweep right here. So I could have went long here, but I didn't. Boom, I shorted this using my entry model. High time frame sweep, internal liquidity swept, blah blah blah. There's a fair value gap here inverse, change state of delivery, went short. Place my TP off this breaker block. I could have placed it for this liquidity sweep, but I just wanted to play it safe, place it to this breaker block, right? Let's go. And yeah, you see it just keeps coming into the first half, boosting off. How am I doing on time? 4 minutes. See, I'm trying to provide content for you guys in the most effective way possible. If you guys do like this like fast-paced learning where I don't yap, just subscribe. It's completely free, and I also have a free Discord server where we're just trading, calling out trades, helping each other out, sending videos. It's all free, by the way. So yeah, I just want to let you guys know that. So here, let's look at another breaker block example, but this time for the inverse breaker block. Here, we see a high, a low, a higher high. See, because it also swept liquidity on the higher high. And then here, boom, a lower low, right? And like I said again, higher high usually sweeps liquidity. If we go on to a higher time frame, let's say 15 minutes or maybe 1 hour, it's probably going to be there. Yeah, see the 1 hour, it swept this liquidity. And on the 15 minutes, this was a perfect entry, by the way. So boom, swept this liquidity on the 15 minutes, swept internal liquidity and created a breaker block. You could literally catch this short here, or you could have caught this short here like I did. So here, boom, let me show you guys the trades I took. Kind of got a flex. These were in the same day, these two. Boom, you see inverse fair value gap. I saw 1 minute change in state and delivery, took a short off that. Targeted again. I didn't target the breaker block this time. I actually targeted this fair value gap. So I took it on my phone, I just copied it here. And then here, boom, retracement into this fair value gap. Short, boom, right? These are perfect entries. And then this would have been another good entry because we see this breaker block. Again, the first candle before the change is where I would put this breaker block because that's the most sensitive point. You could have it all the way up till here, but as you can see, it's kind of excessive. I keep it there. And again, we take the sequence, we see price touch onto this 2.5. So here, this 0.5 to 1, that would have been the optimal entry, but price touched into the 0.25, and as you can see, this is all marked out. And this is my argument to the people that say that ICT is just freaking patterns. Okay, they say ICT is patterns, but look at this. Is this a coincidence? Tell me, is this a coincidence? It literally touched into the 0.25 and then blasted down, and then boom, re-entered back into the same breaker block, touched into the trigger section, the trigger point, and again blasted down. And some people still say it's a coincidence. It's the algorithm is predictable, right? I don't know why people say that's freaking patterns. Look, this is you can. And by the way, don't ever take a PDA rate and just trade it solely off that. Incorporate other ICT concepts. Here we see this fair value gap right here. This is a nice trade. Boom, we see this fair value gap right here. So it touched into this breaker block, as well as touching into this fair value gap, respecting it, touched back into the trigger point. Let's try to see if there's any liquidity sweeps. Oh, see again, there's a bigger, higher time frame liquidity sweep that it touched into. Fair value gap it touched into. I guess you could say this is a internal liquidity sweep. So boom, I would have taken the short already. I would have probably taken a short off of this. So off of this candle close, I would have taken a short, placed my stops here, and then boom, took this, and then let's see, is it gonna be 2.5, negative 2.5? Let's see, standard deviation. Guys, look at these trades, bro. Okay, maybe the risk to reward on this one's a little dookie, but this is just a quick trade. I got boom. You can even target this, increase the risk to reward. But yeah, I don't know. People still say that it's it's freaking patterns. Okay, like it's not. And yeah, literally that's it for breaker blocks. I hope this video made sense. If you guys do want me to let me delete this because I didn't take this trade. If you guys do want me to make another video, let's see, on order blocks, order cocks, maybe make a better video on liquidity sweeps. Look at that. Do you see that? It's like a 4 hour one. Let's look at the 1 hour. It's probably 1 hour. Yeah, look at that. See, this is a nice short. Liquidity swept, high time frame, order block, 15 minutes. Let's see. Let's see if there's any fair value gaps. Oh, see, market closed, so I wouldn't have traded this, but look at this trade. Look at this trade, chat. I'm putting you guys on. This is, what the heck? Boom, fair value gap, inverse retracement, back into it. Back into another 15-minute fair value gap. Could even hop onto the 5 minutes. Oh my gosh, bro. Oh my gosh, bro. Wait, let's hop onto the 1 minute. Let's see how this looks. Look, internal liquidity being swept. This is a nice short model. So I don't know if the market's gonna continue going like this, because right now it's Friday. But boom, look at that. That's what I'm expecting. At least I think that's what's gonna happen. But anyways, I hope you guys enjoyed this video. If you did, please consider subscribing. I'll greatly appreciate it. And also, I have more educational videos for free. For example, a accumulation, manipulation, distribution video. So here, this is what I'll be talking about. Look at this: accumulation, manipulated past it, and distributed. So you guys would have been able to catch this trade too. That's another thing I looked for when catching this short or these shorts. Anyways, yeah, see you guys, and join the Discord.